children's dress manufacturer's variable overhead costs are allocated on the basis of budgeted direct labor hours. According to the December budget, each dress takes 4 direct labor hours to produce. Budgeted variable manufacturing overhead cost per labor hour is $12, and the budgeted number of dresses to be made is 1,040. Actual variable manufacturing costs in December were $52,164 for 1,080 dresses produced. Actual direct labor hours were 4,536 hours. The variable overhead spending variance is. Let's set up our variable overhead variance model for this question. Let's take a look at the model. On the far left, we have our actual variable overhead. The actual cost for this period, $52,164. In the middle, what I call our flexible budget in the middle, we have our actual quantity at the standard price. The actual quantity, the quantity here is labor hours. And that's a confusing topic for many candidates because variable manufacturing overhead costs are allocated on the basis of direct labor hours. Our Q's in this analysis are based on direct labor hours. So the company actually used 4,536 hours. We multiply that by our standard price. Our manufacturing overhead cost per labor hour was supposed to be 12. So that gives us $54,432. On the far right, our static budget is our SQ times SP. Now, SQ is not given to you in this problem. Generally, SQ is the one factor that you have to find. SQ is telling us how many labor hours should we have used based on our actual production. When we actually produce 1,080 dresses, and each dress is supposed to take 4 hours, we were supposed to use 4,320 hours. That's SQ, 4,320. We multiply that by our standard of $12 per hour. Our static budget on the right is $51,840. So now we can determine our variances. On the left, the spending variance is $2,268. That's the difference between $52,164 and $54,432. Now, some people struggle with the direction of the variance. Not only do you need to be able to calculate the $2,268, you also need to be able to calculate whether this is favorable or unfavorable. The actual overhead was less. That's a good thing, right? So that's why this is favorable. For the efficiency variance, the difference between 54,432 and 51,840 is 2,592. Now, we have to determine the direction of the variance. We were based on actual production, we should have spent 51,840 because the actual quantity of labor hours used was more than the 4,320 because the 4,536 is more than the 4,320. This variance is unfavorable. Now, I'd like to go through that so you could get an example where we're calculating both of the variances. Now let's take a look at the answer choices. Notice how tricky they are. Both of our answers, the 2268 and the 2592, are listed in the answer choices. Make sure that you don't make a simple mistake. Don't go through all the work on the CMA exam only to pick the wrong answer. The question was the variable overhead spending variance. So I agree that the $2,592 unfavorable efficiency variance is something that you would calculate doing this problem. You didn't have to do that side of the problem. You really only needed to do the spending variance side. Now, for demonstration purposes, I showed you both so we could practice. But you want to make sure that you know the spending variance is the variance on this side of our model. So the correct answer is $2,268 favorable, which is choice C.